right, we're going to look at the stock market now. I'm going to give you my analysis and projections. Please do read this slide. It takes a good look at how we approach our analysis and what that means for you. And the key thing we want to always stress is trade ownership, that you own your trades and that you do manage the risk in those trades appropriately. Multiple time frame analysis and projections in the stock market. We're going to look at the S&P 500. In multiple time frame analysis, we'll take a look at the market condition monitor also. Here is SPX on the S&P 500, and we're only going to do SPX right now. I'm actually going to switch over to our member charts, which has a little more analysis on there. This, by the way, is the grid that the level 4 members do get, but I'm only going to go on the top one right over here at the S&P 500, and you will see the analysis in there. That one switched over, and here is the S&P 500. So this is what you see as the bull market, the end of the bear market and the uptrend in the bull market in the S&P 500. The chart that you see right over here and these yellow areas, as I showed before when I did the monthly chart in Bitcoin, are the periods of risk, as you see. And now the next period of risk for the stock market is out here into this March through May period. And this is what I discussed in the year-end show, where I thought that the risk was for a decline. Our patterns suggested that it would get up and to about 5,000 or 50-50 on the monthly chart. And this resistance up over here, which is from the daily, is at 49.50. So this is kind of shorter term that we're looking at over here. And then out over here after this cycle ends is where we're looking for the rally to come that actually gets up into that 5,000 area out in the, I would say, Q3 period out over there. So we're looking for a pretty good size move in here to the downside. And then after that, moving back to the upside, it should fall into the support area here. One of the key things that I put in here that I want you to see, this is the 34-week simple moving average. This is what we look at. A lot of people look at, you know, the 50s, or they look at the 200-day moving average. This is the one I look at. And it's important to look at when you're looking at the cyclical analysis. The 34, we also use the 13 sometimes. And you can see that each of these declines right over in here got into and past that 34-week moving average, as you could see in this uptrend. And the uptrend is very clear with higher highs and higher lows. Here you could see the downtrend with lower lows and lower peaks, and that it got up here and, you know, just barely got through that 34-week moving average, each of those rallies. So 34-week moving average is often very important. In very steep upside long-term moves, the 13-week tends to be even more important than the 34, but that's not what we have really going on right now. So you see the 34 moving up through here. Let's say that sometime out here in April, it gets up to 4,600. The support over here is 4,500 about. So we would expect that it would give up from this 4,900 best case down 300-400 points. This is just an absolute best case. Now you see this note in here. It syncs with the daily cycle troughs in mid-March and in early May. So this low here could come in mid-March, or what could happen is that the low doesn't come until out over here into early May, something like that, based on what the daily patterns are telling us. There's a peak very likely to occur in here. This is a very important resistance area here. As we look at this, this is the 100% fib extension at the top of that blue area, and this is the daily extensions right in here. So let's take a look here as we look at the daily chart. We do this one a little differently, because what we do is we build basically a cloud, as we call it, the slim cloud. This is two different channels that occur in here. This would be kind of the average expected pattern that we have in here, and it would be, you know, making a higher high above that cycle because it was positive, or getting up in here to this target zone, as we call it. That's a little blocked out. right there, the target zone being between the 78.6 and 100% fib extensions. Those are the ones we put on the weekly chart. So it gets up here to the top of this zone. Now, this top of that right there at the 100% is at 49.54. It's not ridiculous that it could extend up into that time frame. Now, again, you can see that there's been a small shift in here where these cycles are minimally reduced. It doesn't change a whole lot. When you look back here, they're still pretty much perfectly aligned. That we ghosted this cycle right over here because this came out a little bit early. Remember, we were looking for this trough to come out into mid-January, but it actually came in the first week of January, maybe 6, 7, 8 trading days earlier than we expected, so that we use that information to help us with our projections. This is an area it really should begin to fail and then get a correction. But you see, we're not looking for a big break in here. That's because this is only the minor cycle. That would mean that the next rally out over here on that minor cycle would set up what would be that bigger decline. If you look right over here, this time frame right there puts you at March 18th. The next cycle beyond that puts you somewhere around the 1st of May. So it could be this cycle that has the big correction for the stock market that we have here on the weekly, or it could be the next correction in the next cycle that forms, which would be much further out there and out into May. We don't really know which of those is going to contain, didn't mean to go that far, is going to contain this corrective period, and that when that period of risk comes in. But we do know that it's going to need to have a downturn in momentum. So this is the weekly chart again. And the reversal scout, you see where it turned up right over there. That told us about this trough. You see where it turned up here. It told us about this trough. See where it turned down here. It told us about that peak. We don't have that yet. So we have been bullish. We've been looking for the market to move up, configurations positive, momentum positive, and we just follow this stuff. I mean, it's not, when you break it down this way, the market just plainly speaks to you. You can see in here that the momentum in here, based on the option bias study right over here, it has been positive except for 2 little periods right in here where some orange dots formed. But they were because there's a volatility component built in here, they were just barely in that area, and then those orange dots disappeared. Here it was much deeper, and you could see the orange dots remain. So I leave these warnings in here so that we can see there was actually a warning there that it was slightly overdone, not to the point where it could really bring a big decline, and it only brought that modest decline right over there. And we're still very positive. So this basically tells you put your option positions as negatively biased when it's red, put it as positively biased when it's green. That's good information. Here is a look at the slim ribbon and the slim ribbon PO on the daily chart. And you could see that way back over here is where the slim ribbon turned positive in November, right there. And each of these times that it gets down under the 25 and then ticks above it, it gives us a notice, essentially, that momentum conditions are continuing on the upside. This is an area chart that you could see on the slim ribbon, and that tells you still positive. There's no change. So we're going to need this to start to turn blue and then turn red in order to, or is that purple? It's blue down over here. And then turn red to tell us that the momentum had changed and that we are going into the corrective period that we see right over here. So we're using the multiple time frames to help us with that. This is a 2-hour chart right over here. And what we have on here is the market condition indicator on the bottom. And when this is trading up here in the 90s and 100, it just tells you that the longer term momentum, this is a multiple time frame analysis indicator that gives more weight to the longer term. In other words, because the longer term has more power. And that just keeps telling us that when there's going to be corrections, they're likely to move back to the upside. Now, right over here, you could see as we look at the slim ribbon PO, This is a little different use of it than I usually show, but you could see that there's here where there was an energy loss going on and couldn't get over the 75 and then turn down. That's when you were getting into a 2-hour corrective period. Now, this is for near-term traders. This is using this as a guide for your day trading or short-term swing trading. And here you could see again that this is has some an energy loss going in here because it can't get up over these levels. So we might have this correction going on. There's a let me just get this pointer up here. There's kind of a consolidation that you see happening right over here. But the 2-hour momentum is still very strong. So it's like a domino effect. The 2-hour will turn down first. This might be the warning of the loss of energy. When the 2-hour turns down, the momentum negative will show right over here. Then it will start to look like it's turning down and maybe getting into the lower channels over here on the daily. You'll start to see this neutralize in the bottom on the option bias indicator. And then you will lastly see this weekly one turning down right over here. And then we will know that we are in a correction. But what we're looking at very clearly is the fact that nothing has changed. Everything is still positive. Everything that we look at is very positive. The configurations are looking great. And that is a likelihood that the market will continue to be on the firm side. That means modest corrections, but getting squeezed by the fact that it's at big resistance and real high valuation. So upside is going to be tougher to come by. And you'll start to see the downside have bigger days or bigger hours on the downside as that begins to change. Let's take a look quickly as we switch over and we take a look at the market condition monitor. This is our proprietary app that is available for level 3 and level 4 members. The difference right over here right now is that the intraday exists on the level 4, but the 3 different time frames are available on level 3. You can either look at it in trader mode or time frame mode that you see right over here. So depending on the time frame, it tells you the conditions. And I just want you to see right over here as we look at the indexes right here that they are the SPY is very bullish. The QQQ has ticked down from very bullish to bullish still. The IWM, which doesn't have a lot of strength, is neutral. And the diamonds are still very bullish. I mean, they're still showing good strength. You could see Apple peaking out here as still bullish right there. But you could see the dates here that SPY turned positive from bullish to very bullish about a week ago, where the QQQ ticked down from very bullish to bullish only today. You can see that. So the diamonds actually ticked up to very bullish from bullish today. This is just an amazing app in here. And you can see in here as I scroll the conditions, you can see the weakest ones, the ones that are very bearish. Now I'm looking at short term here. If I want to look at intermediate term, well, it's going to change. The intermediate term conditions, as you could see, are very bullish for Caterpillar, the diamonds, XLF, Micron, Qualcomm, and right over here you could see they're very bearish. And here for Ford, GD, Newmont, so you see the golds are bad. They need to really have some significant changes. And if you're a level 4 member, you could get notified by the type of a change that you want through our Discord notification system. So this is just a fantastic application. And again, level 3 and level 4. And we're planning some upgrades in here very soon. That is a look at the stock market. I hope that was very informative to you. Remember, if you're interested in the NASDAQ, you're interested in the Russell, that information comes out in our charts. You'll be able to see that as I update them this weekend. And there'll be a special update on Monday because I'm presenting that analysis to a small group of people, and you'll learn more about that as we go forward. And then, of course, RB presents all of this in FutureSpeak. So if you want to see all of that live analysis on all of these indicators and all 24 of the futures and ETFs that we do, then RB presents that every single Wednesday in the FutureSpeak show. For those of you that are just peeking in here at the end of the show or didn't see the whole show or watching a YouTube clip, we have this level 2 special that's going on right now. And Matt did a great job of explaining that earlier in the show, so you can go back and watch it. But you get everything in level 1, everything in level 2 that you see listed here for just $29.50 for the first month. You'll get a great handle on our analysis, and just click the Learn More button on the top of the website. And any questions you have, write to Matt at askSlim.com. The special is for upgrades or new level 2 members. If you're new to askSlim, you can learn from our team of pros. Just go to askSlim.com and look around at that broad amount of education and analysis that we bring for traders.